It's a story of trust, a story that's been evolving for thousands of years. But have you ever stopped to wonder what money really is? We use it every day, but this thing that rules our lives is actually just an idea we all agree on. It's a story of trust, a story that's been evolving for thousands of years. Let's rewind the clock and explore this incredible journey from the glint of gold to the digital pulse of Bitcoin. Our story begins a long, long time ago, before coins or cash ever existed. Imagine a world of barter. If you were a farmer with a surplus of wheat and needed a pair of shoes, you had to find a shoemaker who just happened to want your wheat. It was inefficient and complicated. This problem, known as the double coincidence of wants, made trade incredibly difficult. Societies needed a better way. So people started using commodity money. These were items that had their own intrinsic value. Think salt, seashells, cattle, or beads. In ancient China, cowrie shells were a popular form of currency. In Rome, soldiers were sometimes paid in salt. This is where the word salary comes from. While better than barter, these commodities were often bulky, perishable, or hard to divide. Imagine trying to buy a loaf of bread with a fraction of a cow. It just wasn't practical for a growing economy. This is where precious metals entered the scene, specifically gold and silver. Why them? They were durable, easily divisible, portable, and, most importantly, rare. Their scarcity gave them a stable value that everyone could recognize. Around 600 BC, the Kingdom of Lydia in modern-day Turkey had a brilliant idea, minting the world's first standardized coins. These were made from electrum, a natural alloy of gold and silver, and stamped with an emblem to certify their weight and purity. This was a game changer. No more weighing gold dust for every transaction. The king's stamp guaranteed its value, creating a new layer of trust. This concept of stamped metal money spread like wildfire across the globe, from the Roman denarius to the Chinese cash coins. For centuries, the value of money was tied directly to the value of the metal it was made from. This system, known as the gold standard, brought a degree of stability to international trade. A country's currency was directly convertible to a fixed amount of gold. If you had a US dollar, you could, in theory, walk into a bank and exchange it for a specific amount of gold. This anchored the financial system, preventing governments from printing money recklessly. But the gold standard had its limits. As economies grew, the supply of gold couldn't keep up. It was restrictive. During times of crisis, like the Great Depression, countries found themselves constrained. They needed to inject money into the economy to stimulate growth, but the gold standard held them back. One by one, nations began to abandon it. In 1971, U.S. President Richard Nixon officially severed the link between the U.S. dollar and gold, ending the era of the gold standard for good. This ushered in the age of fiat currency. Fiat is a Latin word meaning "let it be done." Fiat money, like the dollar, euro, or yen we use today, has no intrinsic value. It's not backed by a physical commodity. Its value comes entirely from the trust and confidence we place in the government that issues it. It's just paper, or more accurately today, just numbers on a screen. This system gives central banks the flexibility to manage the economy, to control inflation, and to respond to financial crises. But it also places immense trust in these institutions to act responsibly. The transition to digital numbers on a screen was the next logical step. Think about it. How often do you actually handle physical cash? Most of our transactions are already digital credit card swipes, bank transfers, online payments. But money became increasingly abstract, a series of ones and zeros moving through a centralized network of banks and financial institutions. These institutions act as trusted third parties, verifying and recording our transactions. For a long time, this seemed like the final form of money. Then, in 2008, in the midst of a global financial crisis, an anonymous person or group known as Satoshi Nakamoto published a white paper. It was titled Bitcoin, a peer-to-peer electronic cash system. This paper proposed something radical, a way to send money directly from one person to another online without any bank or central authority in the middle. How? Through a revolutionary technology called blockchain. Think of the blockchain as a public digital ledger that is distributed across a vast network of computers. Every transaction is a block that is cryptographically linked to the one before it, creating a chain. This chain is transparency. One can see it and it's incredibly secure. To alter a single transaction, you would have to alter every subsequent block on thousands of computers simultaneously, which is practically impossible. This solved the problem of double spending digital money without a central authority. It created trust not through an institution, but through code and mathematics. Bitcoin was the first cryptocurrency, but it opened the floodgates. Today, there are thousands of different cryptocurrencies, each with unique features and goals. Some, like Ethereum, go beyond simple transactions, enabling smart contracts, self-executing contracts with the terms of the agreement written directly into code. This has given rise to the world of decentralized finance, or DeFi, which aims to rebuild the entire financial system, lending, borrowing, insurance on the blockchain, open to anyone, anywhere. So, what does this all mean for the future of money? We've gone from bartering goods to trusting in the value of rare metals, to placing our faith in governments, and now to trusting in the power of decentralized code. Each step represents a shift in what we, as a society, agree to believe in. Cryptocurrencies represent a fundamental question. Do we need centralized institutions to manage our money? Or can a decentralized network do it better? The debate is fierce, and the technology is still young and volatile. There are huge challenges to overcome, from scalability and energy consumption to regulation and security. But the underlying trend is clear. Money is becoming more digital, more programmable, and potentially more democratized. The journey from a gold coin you could hold in your hand to a line of code on a global network is nothing short of extraordinary. It's a story about human ingenuity, our constant search for a better system, and the ever-evolving nature of trust itself. The next chapter in the history of money is being written right now, and we all have a front row seat. Thank you so much for joining me on this journey through the evolution of money. It's a fascinating topic that affects every single one of us. If you enjoyed this video and want to learn more about finance, technology, and the trends shaping our world, please hit that like button and subscribe to the channel. It really helps us out. Drop a comment below and let me know what you think the future of money looks like. Until next time.